Forex 101. A Forex primer. What is Forex? Forex or FX is short for foreign currency exchange. It is a global market where people trade money among the major financial centers. Forex is a worldwide market. Anyone can participate. It is the largest, most liquid cash market with $1.9 trillion per day traded. Terms. There are 8 terms you must know: pip, lot, take profit, stop loss, leverage, currency pair, bid and ask. What is a pip? A pip is the smallest price change for a currency exchange rate. Most changes can happen in 4 decimal places, some happen in 2, 3 or 5 decimal places, 1 basis point. Your Forex broker should let you know how many decimal places for each currency pair. An example would be the USD CAD bust on 4 decimal places, 0.0001. If the USD CAD moved from 1.0000 to 1.0001, it has moved 1 pip. If the USD CAD moved from 1.0001 to 1.0004, it has moved 3 pips. What is the difference between the top yellow line and the bottom red line in pips? 69 pips. What is a lot? A lot is the minimum unit of trade. In currency trading, the standard lot size is equal to 100,000 units. What is a mini lot? 1/10, 10%, of the standard lot size. 1 pip of a currency pair based on USD is $10 for a standard lot trade and $1 when trading a mini lot. To calculate the standard lot trade, you multiply 0.0001 by 100,000, which equals 10 units. What is a currency pair? A currency pair is the quote and price structure for currency traded in the Forex market. The currency pair value is determined by its comparison to another currency. The first pair is the base currency. The second pair is the quote currency. A currency pair is how much quote currency is needed to buy 1 unit of the base currency. For example, we quoted the USD GBP at 1.5. To purchase the pair, for every 1.5 British pounds that you sell, you purchase, receive $1. When you sold the currency pair, you would receive 1.5 British pounds for every $1 you sell. The base currency would be the USD, the quote currency would be the GBP. Another example, we quoted the Euro USD at 0.667. To purchase the pair, for every $0.667 that you sell, you purchase, receive, €1. When you sold the currency pair, you would receive €1 for every $0.667 you sell. The base currency would be the euro, the quote currency would be the USD. What is bid? The price a buyer is willing to pay for a currency pair. For NZD USD, the bid price equals 0.72713. What is ask? The price a seller is willing to accept for a currency pair, also known as the offer price. For the NZD USD, the bid price equals 0.73426. What is leverage? Leverage allows you to open trades that are larger than the capital in your account. In this example, $1 million have been purchased through a long USD/JPY position with a $50,000 account balance using a 20-to-1 leverage. Trading on margin can both positively and negatively affect your trading experience, since both profits and losses can be dramatically amplified. What is take profit? Take profit is the number of pips or price from the current price point where to close out their current position for a profit. What is stop loss? Stop loss is used to limit an investor's loss. An investor sells a security when it reaches a certain price. Take profit and stop loss when you buy. The white line is the current price point, which equals 1.04631. The magenta line is the current take profit price, which equals 1.04885. The blue line is the current stop loss price, which equals 1.04275. Take profit and stop loss when you sell. The white line is the current price point, which equals 1.04631. The magenta line is the current stop loss price, which equals 1.04885. The blue line is the current take profit price, which equals 1.04275. What is a trading strategy? A trading strategy helps you determine when to get into, enter, and get out of or exit a trade. There are two Forex trading strategies, fundamental and technical. Fundamental trading strategy uses financial news to predict movements in a currency pair. The financial news can consist of economic indicators and/or news-based events. An example of an economic indicator would be the gross domestic product or GDP. A technical trading strategy focuses on statistic and probabilistic indexes to help predict the future trend of a currency pair. An example of this is the moving average, which is shown on this chart. What is a trading platform? A trading platform is the software typically provided by your broker used to make trades through their system and for managing your account. What is an indicator? For technical analysis, an indicator is a mathematical calculation based on a currency price and/or volume. The result is used to predict future prices. For fundamental analysis, an indicator could be a measure which can be used to predict future economic trends. Common general economic indicators are the unemployment rate, new housing starts, and the consumer price index or CPI. There are four indicator types: trend, momentum, volume, and volatility. Trend indicators. By looking into the movement of the trends, you can decide on the level at which you can start trading. Moving average, parabolic SAR, and MACD are just some of those that make up this group. This chart shows the moving average. Momentum indicators. These are considered to be the oscillating indicators and are most clear-cut in pinpointing the overbought as well as the oversold positions. Similarly, they show the signals for any new trend. Stochastics, Relative Strength Index, and CCI are just some of those momentum trend indicators. This chart shows the Relative Strength Index. Volume indicators. Price movement is very much dependent on the volumes of the trades. Generally, the price movement which is rooted from a high volume gathers a fairly stronger signal compared to one which is inspired by the low volume. Examples of which include the Force Index, Money Flow Index, Ease of Movement, Chaikin Money Flow, and many others. This chart shows the Money Flow Index. Volatility indicators. They normally look into the ranges that define the volume that lies beneath the movements and the price behavior. The common examples include the average true range, Bollinger Bands, and the envelopes. This chart shows Bollinger Bands. What is an expert advisor? An expert advisor is trading software to help the currency trader with Forex trading analysis and the execution of trades. This chart shows the Wilder Forex Expert Advisor. Thank you for viewing our presentation. For more information on the Wilder Forex Expert Advisor, please go to www.wilderforex.com.